What's up everyone? Welcome back or welcome to another weekly dose of video. If you're new, hit the subscribe button and join the journey. My name is Aldo, I'm a powerlifter and day trader, and today I'm gonna reveal all of my secrets, lay out the path that led me to 100k a month by day trading, so you can just copy me. These are gonna be my opinions and experiences, and above all, what has worked for me over the years. This video may be very interesting for the viewer, and that's because I've been through a lot, switching from a mechanical system to a discretionary one, losing everything, getting funded with prop firms, flipping my personal account. By the way, if you haven't seen Project 6F yet, you're definitely missing out. I'll leave the first episode in the upper right corner or down below in the description. This video is gonna cover it all, and hopefully when you apply this stuff on a consistent basis, sooner or later, you're gonna smash your goals. If so, please share this video so we can reach and help more people. That would mean a lot to me and to the channel. Alright, let's get to the sauce. I found this app where I can draw and write. I figure it should be much better than actually me writing or drawing on paper, so let me know how you find it. As I mentioned, today I'm gonna lay out the path that led me to 100k a month by day trading. Now, there is a big but. This path isn't gonna lead you to 100k a month. This path is gonna lead you to mastering your trading skills. And that means that the amount you're able to make heavily depends on how much percentage you will be able to make, but above all, how much capital you will be able to acquire. And I'll make you all a very quick example. You're able to make 5 to 10% a month, and you have a 200k account. And of course, this 200k could be just a funded account, private investors' money, others people money, your personal account, a combination of all of them. So it really depends, but we're just gonna consider the amount. So 200k, if you're able to make 5%, that's 10k. And if you're able to make the same amount on a 2 million account, that's 100k. Again, this 2 million account could be a couple funded accounts, couple others people money, so it doesn't really matter that much. In the end, it will matter your profit splits, but just to make you all understand that the difference is pretty big and it really depends on the capital you have. You could say, yeah, managing 2 million is not like managing 200k, and I will tell you that once you have the skill of handling pressure in general, of handling real money, losing money, it really is the same thing. At the end of the day, you will experience the same pressure on a 2 million account and on a 200k account. This path is gonna lead to mastering your trading skills, and what you're gonna earn is entirely up to you. The first step is learn to read price action, but also at the same time you should also build a strategy. I'm writing this as just one step, and that's mainly because to read price action you need to have a strategy, but to build a strategy you need to be able to read price action. Couple tips for this step is to put in chart time. By chart time, I mean put yourself in front of charts and start to read them. Of course, at the beginning, if you don't have a strategy, you won't be able to read price action, because you can only read price by some sort of concepts from a strategy. So there are literally thousands, if not tens of thousands of strategy out there, all pretty good. So I'm not going to explain you all my strategy, and that's also because it will make the video too long, and I'll probably reserve that for a future video. Price moves, creating patterns, repeat itself by just making patterns. Once you're able to and get good enough to find this pattern printing live, that's when you know this step is almost completed. Don't beat yourself up. At the beginning, it's very hard to figure everything out at the first try, or even the first day, first couple days, couple weeks, even couple months. It's definitely hard to see these things playing out live or playing out in the markets, but one thing that is gonna help you along the way in pretty much everything is practice. Keep this word in mind and repeat it to yourself many times, because that's gonna solve a lot of issues. I first built a discretionary approach. Basically, the only difference is that when you have a discretionary approach, one of the key elements of the strategy will be your intuition and your experience. At the beginning, you can already imagine that it's extremely hard to play these kind of systems, and that's mainly because you don't have any experience and your intuition is not good enough. But we all start somewhere. I started myself with a discretionary approach, didn't really have much success. Discretionary. Then from discretionary, I went not on purpose, it was really just random. I went to a mechanical approach. That basically means that you have a set of rules. Mostly the answers will be yes or no, so very, very basic questions. And that's when, for the first time, I found profitability, consistency, and got funded the first time. A mechanical system is really easy to use, but the problem with that is that it really has limited potential. By that, I mean that it really thrives on certain market conditions, but markets constantly change. Basically, price moves in a different way, so your strategy may not perform like the past. For a mechanical approach, the only thing you need to do is to practice the approach, get on to a backtesting platform. I have a video on how to do that. I will leave the link in the description so you can see for yourself. I do think backtesting is super important for both mechanical and discretionary, but I also think that for mechanical systems, backtesting is crucial. For mechanical approach, you backtest months, years, record any single trade you take, why you take them, what did you see at the time. That's also is gonna give you the practice you need to actually master the approach. And when you are done, you will have a set of data that will prove you that the system you built actually works and makes you money long term. The thing I experienced with my mechanical approach is that, unfortunately, past months' performances weren't really predicting future performances. So don't attach yourself too much to past performances and to the data you gather. Always be adaptable to whatever the markets tell you. Either they are changing or your approach may need some refinements. It's consistent work. I want you to know, before we begin to talk about the discretionary approaches, that this step is the most underlooked and underrated out of the entire thing you need to do. And that's mainly because people often rush this step and then they go on and try to make some money, and then all of your deep down problems will come out and definitely cause you some hard times. To give you all some spoilers, most of your psychological problems will come from this step. So as I was saying, the discretionary approach is definitely the hardest to master. And again, that's because your intuition and experiences are one of the key elements of the strategy, like how you read the markets, where you think it's going to go based on a set of factors, a set of variables. Starting with a discretionary approach might take definitely a little bit more time. So just keep that in mind. Starting to become profitable with a mechanical approach for me taught me the most important lessons, how good you really have to be to actually read price action, how much practice you really need to put in, and how to handle losses, how to handle wins. Finally, I switched to a discretionary approach again as of recent, and that's when really I was able to unlock my full potential. I've been in the markets for 3 years already, so my intuition and experience is definitely a little bit better than the beginning stages. Either systems are definitely fine. It also depends what you want out of trading. I do know a lot of very successful people who trade with a mechanical system. In my career, I went from discretionary, then mechanical. That's when I found profitability, consistency, and I was able to learn the most important lessons of a profitable trader. And then I went back to a discretionary again, and that's when I really started to see the real gains. Again, when I switched to the discretionary, I already had 3 years of experience in the markets. I definitely think my intuition and experiences were definitely a lot better at that point, so it made sense to make the transition. We have another step, which actually is the last one, since once you're able to get all of these things right, what is it that it's gonna help you massively? Chart time, practice, backtesting. As for the strategy, I do advise you all to write it down on paper, on whatever, even a document on your PC. That works fine. I also made a video on how to do that, all of the key elements that your strategy, your trading plan has to have. I will leave the video in the description so you guys can see for yourself. The next step is psychology. And that's when pretty much all of the traders fail. But there is a very big misconception, a very big myth, and that is that it is often said that your technicals are good enough and you should work on your psychology. Basically, the most common problems are fear of executing a trade. All of these problems mainly happens when you go live. So when you read live price action and play with real money, that's when all of your problems, unresolved problems, will come out and will cause you hard times. There's not really much work that you can do here aside from practice. And that's because if you think about it on a logical perspective, practice. If you have some fear of executing your trades, lack of confidence, that indicates that you don't have really confidence on the strategy you built. Because if you knew that your strategy makes you money long term, you wouldn't really have fear. Because you know, even if you lose couple of trades, in the long run, you will make money. Or if you have greed problems, where you hold onto your trades too long and then they come back and stop you out, that's again another problem you can fix by backtesting. Because if you knew that at some point when your trades hit some levels, they usually tend to go back and stop you out, why are you holding them? There's not really space for greed or for fear. These are actually the two most common issues, but they don't really make sense if you have a strategy that you know for a fact that it does work, and you know all of your exit points, all of your entry points, why you enter, why you don't take trades here. Again, if you rush this step, you are gonna have problems. Also, one thing I wanted to touch more on is the discretionary approach. I spoke about backtesting, which is essential for mechanical systems, but I do think it's very nice for and very useful for discretionary approaches. And that again because even if you build an approach based on your intuition and experiences, you know you have a lot of experience in the markets, probably 3 to 5 years, even then you don't really have much proof to know that the system works. So what you go on backtesting and see if you're able to use your intuition, to use your experience to your favor. In backtesting, it is crucial to be as honest as possible because you can probably see price moving forward. You know what is gonna happen, and it's super easy to cheat on yourself. So to take a trade that you wouldn't really take normally, to remove a loss that you would have taken instead. So it really is very easy to cheat, and this is gonna come out in the psychology part because you know you cheated on your backtesting. So when you go live and you have to actually put in real money, you don't have any confidence. How could you have confidence if you cheated on your backtesting, or if you don't really know if the strategy you built is profitable, is tough. This path is a couple of pixels in the screen, but mind you that it may take 3 to 5 years to actually get to your goals. But again, you're not going to be able to do that if you don't do the right step and complete them in a proper way. If you have any more psychology problems, that could be when you first start to play with real money. The one thing that can fix anything else is experience. How would you feel about losing 1k, 1,000 euro in one day, but you're used to losing 5 to 6k in one day? It really feels like nothing. So what I'm saying here is that at any level, you're going to experience bigger losses, hopefully not in percentages, but in numbers. And they might hurt you the first time, and that's absolutely normal because that's the first time you lose that much. Let's say the first time that you lose 1,000 euro in one day, in one trade, that's gonna hurt. But it really is important to trust the plan you built and let everything play out. Let the probabilities play out in your favor. The first time, it is gonna hurt a little bit. The second time, maybe a little less. But once you're used to lose 1k in one trade, it doesn't feel like much anymore. Once you actually get the skill of getting used to win or lose sums of money, and you know for a fact they will go up, your losses will increase as your wins will. As you get used to this kind of cycle, to this kind of consistent increasing of numbers, that's when you can say that you actually got the skill of trading. And finally reach the 100k a month or whatever your goal is. One last thing, and these are some tips for failing, losing a funded account, blowing your personal accounts. These things happen to pretty much all of the traders. It is very normal at the beginning, especially because you don't know what you're doing. And that's why I would advise you to seek for help, at least at the beginning. Try to take and read as much information as possible. But they are gonna happen. And I do think it's very healthy for you to experience some failures, blown accounts, lose some foreign accounts. And that's mainly because, first, it builds your character. Second, this is actually trading. How much anxiety would you feel if you never failed and got to, let's say, 100k in your bank account, living with the possibility of losing them all? How much anxiety would you have? Failures will teach you how to get back up and will give you the confidence you need to actually make trading a job. There's always the possibility of losing a lot, of losing some accounts. If you experience these things and you know how to get back up, that's when you can clearly consider trading a job, and you will feel like really nothing can stop you anymore. And that's because if you did it once, you know for a fact you will be able to do it again. So don't beat yourself up if you fail, if you do mistakes. Don't quit if you lose some accounts. Take a break if you need to, but get back on it and figure out where you did wrong and keep on going. Like trial and error. You tried some things, they don't work, alright. Let's go on to the next thing and keep trying. Alright, the video ends here. Hope you found some gems. Hope the stuff I said will help you in your journey, and hopefully sooner or later you will reach these numbers or even higher. And that's it for the video. Stay strong and keep trading. Until next time.